Okay, so I think we're ready to go. Welcome to today's webinar, brought to you by Freeths, a top 50 full-service commercial law firm with 13 UK offices, and the Giant Group, a leading contingent workforce management company for 30 years, based in London and Manchester and working nationally. Our subject is off-payroll working, IR35 rules in the private sector. Are you ready? The purpose of the event is to firstly make you aware of the changed responsibilities for all parties under the revised rules, then to describe the potential implications in terms of risk and cost, and then finally to outline the options to address the requirements. Our keynote speakers from Freeths are firstly Alex Angelidis, who is a tax consultant. Alex advises on corporate and personal tax matters and is experienced in employment taxes, advising on PAYE related matters, including the tax treatment of termination payments, employment status of workers for tax purposes, and of course, the application of the intermediaries legislation, IR35. Next, we have Lee Williams, who qualified as a solicitor in September 20 and works as an associate in the Freeths employment team. Lee already has a breadth of experience advising employers and individuals on a wide range of contentious and non-contentious employment matters, including employment status. We're also joined by Charlotte Rees-John. Charlotte is a partner within the Freeths National Employment, Pensions and Immigration team and has had over 20 years experience advising employers from national household names through to startups on the complexities of employment law. Charlotte's currently advising a number of her clients in relation to the practicalities of dealing with IR35, including the migration of contractors to employed status. And from Giant, we have Dan Haslam, who is the Group Sales Director, and his role includes helping clients to manage their contingent workforce compliantly and cost effectively, using the whole range of Giant's services and products. I'm David Hopkins, a workforce management consultant with Giant, and I'll be the chairperson for the session. Format for today will be for the panel to address a number of set questions, which I'll put to them in order to give us a full view from a legal and practical perspective. These will cover the risks from a tax and employment law compliance perspective, the view of observed behaviours, and the practical options available to you. There'll be an opportunity for me to put your questions at the end, so please ask them via the Q&A button as we go through the formal session. Just a couple of final points. Please complete the poll question if you haven't. I see most of you have, thank you. We are broadcasting remotely today, so apologies in advance for any sound or technical issues, but I think we look okay at the moment. So let us begin. Alex, will you please remind us what is IR35 and why is it so called?
Right, so to start with the name, IR35 simply refers to the name of the press release that HMRC made at the time. So it's Inland Revenue Notice 35, which came out about 20 years ago. So the thing to remember about these rules is that they're essentially a set of anti-avoidance rules, and their aim is to tax employees who disguise themselves as self-employed contractors through the use of an intermediary, and that could be a personal service company or a partnership, or in some cases even another individual. I think in order to understand why the rules were brought in the first place, it'd be helpful to have a look at the usual arrangement. So I've prepared a slide in advance of this. Could we have this on the screen, please? Right, so as you can see, what used to happen is an employee and a client or an employer would come together and say, well, instead of paying you your wages through PAYE, why don't you set up a company which you will own? I'll pay you your fees under a service agreement without any deduction in tax. And then you could just take out the income as dividends and a low salary. So overall, the worker would be better off. So clearly, when the employment is one of relationship, where the relationship was one of employment for tax purposes, that's not really right. So IR35 came into force in order to prevent that. So where you've got a worker who engages with a client via an intermediary, in circumstances where the relationship between the individual and the client is one of employment for tax purposes, then IR35 kicks in. And one thing to remember with this one is that something that a lot of people forget is that if that person is an office holder, so a director, for example, then you don't even have to look at the relationship to check that it's one of employment. You're automatically deemed to be within the IR35 rules if you engage via an intermediary and provide services relating to an office and you're an office holder. So that's the gist of it.
Okay, good. So as you say, I mean, it's been around for some time. So what are the changes that are coming in April?
Right, so obviously to understand the changes, we need to know what the position is now. So please could have the next slide to demonstrate what regimes are in place now. So there's two regimes. There's the general IR35 regime, and there's the off-payroll IR35 regime. So at the moment, the general regime applies to the private sector generally. Under that regime, if say you engage with a contractor via a service company and you get the tax wrong, the liability to pay the tax falls on the personal service company, and that's the company that's responsible for determining whether IR35 applies. Under the off-payroll working regime, it's the other way around, but that regime applies currently to local authorities only, and the client is responsible for paying the tax and determining whether IR35 applies. So if we have the next slide, I'll show you what the changes are. So from April, this is what's going to happen. The general regime will only apply to small companies. So a small company, well, for that purpose, is one that has a turnover of less than 10.2 million, assets of less than 5.1 million, and less than 50 employees. The same rules remain for that regime, other than it applies to small companies, i.e. It's the personal service company or other intermediary that's responsible to pay the tax. The big change is on the other regime, the off-payroll working regime, that used to apply, or that still applies to local authorities. From April, this regime will apply to medium and large companies, and that's just any company that isn't small. So obviously the big change in that is that it's now the client's responsibility to determine whether IR35 applies. So at the moment, even if you were a medium or large company, you could have loads of contractors via service companies, but ultimately the risk is on them because they'd have to pay the tax if something goes wrong. Whereas now that burden is reversed. So another couple of big changes that are coming to this regime is that the client, so the person who engages the contractor, has to issue what's called a status determination statement. And they still have to establish whether IR35 applies. Now, in terms of who actually pays the tax if you're caught by the rules, in most cases it might be the client, but the legislation says that the responsibility falls on the fee payer. So the fee payer is the person who pays the individual or the service company. And also it must be a person who's received the status determination statement. So in practice, this means if you're a client who's engaging with a contractor through an agency, if you issue a status determination statement, it means it's the agency's responsibility to pay the tax. If you don't, that responsibility goes back to the client. So those are the two main changes. And another thing too, the last thing to mention on that one is that there's also a bit of a dispute process in the legislation now. So say that as a client, you issue a status determination statement and the worker says, oh, hold on, you've got that wrong. They've got the right to challenge it and you have to respond to the challenge and review it within 45 days. Otherwise, there could be implications. I won't go into any more detail. If you have any more questions, we'll go through that.
And I think we're going to come on to a couple of those points as we go through, Alex. So thanks for that. But so finally, then, when it comes to taxation, what makes an individual an employee for tax purposes?
Right. So clearly, this is the key question here. So as I've explained earlier, for IR35 to apply with both regimes, you have to have a relationship between the individual and the client that is one of employment. So to establish that, there's a series of tests, and those tests evolved through case law. There isn't a definitive test. You just have to take all of them together and make a decision. And not all of them will be relevant in each set of circumstances. However, having said that, there are four that are always the key ones to consider. So the first one is control. So for an employment relationship to exist for tax purposes, the employer has to control how the work is performed. The reason being that if you don't control how a person does the work, then clearly there is an unemployment relationship there. So just to demonstrate how this works, last year there was a big case with Lorraine Kelly. She was an ITV presenter. Well, she still is, I think. And it came down to control, because what the court found is that she decided how the programs would be run, including the running order of the programs, along with other things. So based on that, they said that there isn't the required level of control by ITV, therefore she's not an employee. And the thing to note about that, you need to remember as well that it's the right to control someone, not just actually controlling them. And this is what happened with another ITV presenter, Eamon Holmes. So in practice, ITV and him would together take decisions, but under the contractual obligations, ITV had complete control as to how the work was performed. So based on that, the court said that he would be employed. So that's one factor. Another one that typically comes up is personal service. So for an employment relationship to exist, the employee has to perform the services personally. So if, for example, they are able to send a substitute every now and again to do the work, well, that has been deemed in the past to mean that they're self-employed. Do note, however, that it's not enough to just put a clause in the contract that says you can provide a substitute. You have to actually exercise the right. Now, the third one is a bit controversial. So it's what's called mutuality of obligation, which is a long-standing principle in both tax law and employment law. And basically says that for an employment relationship to exist, the employer must be under an obligation to provide work, and the worker has to accept it. So, for example, we had this case with football referees where they had to go and referee games, but they could just cancel up to the point where they walked on the pitch. So the court said, well, there's no mutuality there because you can just cancel whenever you want. However, having said that, HMRC have taken a really strict approach on this. So they've said that as long as there's a contract and you're being paid for it, then there's mutuality of obligation. So even though it's an important factor, it's not one that HMRC interpret very widely. And the last one to mention, because again, it's one of the main ones, is what's called being in business on your own accord. So if on the fact, for example, you provide the premises or significant equipment, or you market the business and you bear all the risk of whether something will succeed or fail, then on balance, you're not going to be an employee. These are the four main ones. There are other ones that were considered accords, such as equipment, hiring staff, and so on. But I think we've not got time to go into that. But those are the four main factors.
Okay, thank you. And from an employment law perspective, Lee, does it mean that if an individual is an employee for tax purposes, they'll automatically be an employee for employment law purposes?
So unfortunately, the answer to that question is no, they will not. So while HMRC might find that someone's an employee or self-employed with reference to the tests what Alex discussed, an employment tribunal will want to undertake its own interpretation of those tests, and in doing so could come to a completely different conclusion. An example which Alex referred to of one of these tests is mutuality of obligation. So while Alex says HMRC now take quite a strict view of mutuality of obligation, in employment law, for this test to be satisfied, there is still an obligation on the employer to provide work, and there must be an obligation on the employee to accept work. If that is not the case, then an individual cannot be an employee for employment law purposes. If that doesn't make things complicated enough, in addition to employees and self-employed individuals, in employment law, there's a third category thrown into the mix. And as some of you will already be aware, that is that individuals called workers. So if Tom, can we have the next slide, please, with the definition of a worker? Smashing. So as you'll see from the slide, the definition of a worker is set out in section 233 of the Employment Rights Act 1996, which states the following. So in this act, worker means an individual who has entered into or works under, or where the employment is worked under, A, a contract of employment, or B, any other contract, whether express or implied, or if it is expressed, whether all in writing, whereby the individual undertakes to do or perform personally any work or services for another party to the contract, whose status is not by virtue of the contract that of a client or customer of any profession or business undertaking carried on by the individual. So as we can see from Part A of Section 233, all employees are classed as workers. However, crucially, if you look under Part B, or LIMBY as it's often referred to, there's also a second category of worker. So these are individuals who undertake to do work personally for an employer, and the work they do for the employer is not done on a customer or client basis. So why do we have these LIMBY workers in the first place? Well, the law recognises that while someone might not meet all the tests for employee under employment law, the degree of their integration into the employer's business does not reflect that of a contractor either, so someone who's self-employed. So, and therefore, the law recognises that it's only fair that these individuals have at least some of the rights and protections that are afforded to employees. So if Tom, can we have the next slide, please, with the table? So on the screen, we've put a table which sets out some of the rights what each of these category of individual are afforded to under employment law. So as you'll see from this table, self-employed contractors are not afforded much protection at all under employment law. Then in the middle, you have these workers. So if an individual does qualify for work status, you'll see that they enjoy various rights not afforded to self-employed, for example, entitlement to national minimum wage, protection from discrimination, right to paid holiday. Then at the other end of the spectrum are employees. So since all employees are also workers under Section 230, they're entitled to all the same rights afforded to workers. But in addition to this, employees are also enjoy various other employment rights. And as you'll see from the table, these include rights such as the right to request flexible working, paid family leave, such as maternity and paternity leave, and perhaps the most important of all, the right not to be unfairly dismissed. So that outlines some of the rights afforded to each category of individual under employment law. I'm conscious that I'm spending a lot of time on this question. So if we come back to the actual question, the answer is no. Just because an individual is an employee or self-employed for tax purposes, the same doesn't necessarily go for employment law purposes. So an employer will need to undertake a separate employment law assessment in addition to any assessment undertaken for tax. And remember, there's 3 rather than 2 categories of individuals to consider when you're undertaking this assessment.
Yep. Okay, thank you. Now, we know that end hirers are going to become responsible for determining employment status of contractors, whether they're engaged directly or via agencies. So what are the risks for hirers in getting an individual status wrong or actually failing to issue a status determination statement in the first place? Alex, from a tax perspective, perhaps?
From a tax perspective, there's 2 issues to consider there. So the first one is getting the status wrong. So assume that you're engaging with someone directly, so you're not having to think about who bears the liability in terms of an agency being in the way. technically, HMRC could go after historic PAYE liabilities. So usually they can go back 4 years, or if you acted carelessly, they can go back 6 years, or if you acted fraudulently, that's 20 years. So the first thing is that they can come after historic liabilities, even though they said that they wouldn't, they still can. The other thing is that if say you're a business owner and you're wanting to retire, or for whatever reason you want to sell your business, this is the sort of thing that will be picked up on a bias DD process. So I've had it in the past where I've been acting for the sellers of a fairly large company that have been treating employees as contractors for years, and they just weren't able to sell because every buyer will pick up on the point, and they'd say, well, I don't want to buy a company that may have a massive tax liability, for the last up to 7 years. So that's the key risk there. Then turning to what the risk is of not issuing a status determination statement, and actually using reasonable care to issue that statement, because that's another requirement. Well, it's that the tax falls back to the client, and it could be more than the worker is getting. This is a weird nuance of the legislation. Could we have the next slide, because I think it's easier to visualize if you look at it on the slide. So if you look at the chain there, so obviously this will only come into play if you've got an agency in the middle. So to the left, you've got a situation where the client issued a status determination statement. Yes, they're responsible for determining whether IR35 applies, but if it does, then the liability falls on the agency because they've issued that statement to them. If they don't, the liability stays with the client. And what I was mentioning earlier is that imagine a situation where you pay whatever, £100 for the services. The agency takes 20 of that because they're not going to do it for free. So the worker gets 80. If a status determination statement is issued, so if you look at to the left, the payment made by the agency is £80. So the tax is on £80. Whereas if they don't issue it, weirdly, because the PAYE liability goes on the client, it's the tax on what's paid, so on £100. So you end up paying tax on money that the worker doesn't even get. So that, from a tax point of view, those are the implications.
Yeah. And how does this look from an employment law perspective, Charlotte?
Well, I think the tax perspective is scary enough, isn't it?
Absolutely.
Just to add to that, I'm afraid the employment picture is equally as frightening. So it's basically employment tribunal claims. Lee put up a slide in relation to the additional rights that workers and employees are entitled to. Well, if a contractor decides that they want to argue that they were in fact a worker or should be treated as an employee, then they can have claims in relation to those rights. So it might be holiday pay, it might be sick pay, or if we've ended that contractor arrangement, it might be unfair dismissal. We're seeing a lot in terms of unfair dismissal and redundancy pay claims, particularly, as you'd imagine, over the last months with everything that's been going on with COVID. We are seeing a massive increase in litigation. It's not as easy for people to pick up work, and so they are looking to their rights and claims that they can bring. So they can bring those tribunal claims. There are limitation periods in terms of when they can bring those claims, which would be 3 months for most types of claims. But in terms of how far they can go back, it's interesting with the holiday pay claims, because people think about in their mind a 2-year time frame. But for contractors who've never had the right to even claim to take holiday, their claims can date back up to 7 years. So again, the really frightening picture comes where you've got lots of contractors who come together to bring these claims. We'll have all heard of Uber, Deliveroo, those big high-profile claims. So not only from a reputational perspective as a business, we don't want to be one of those cases, but also from a cost perspective. Once you start adding up hundreds of employees with back pay for holiday pay or sick pay, then obviously that can be quite a hefty bill.
Yeah, okay. So this categorization then is crucial. So what are the risks for workers if their employment status is miscategorized? Lee, do you want to take that one? You're on mute.
Sorry, you'd think we'd have learned by now, wouldn't you?
Yeah.
So in a answer, Charlotte spoke about the cost to employers of getting it wrong. However, for some individuals, they might not ever be aware of the fact that their employment status has been miscategorized, or will only realise this months or years later. So it's the other side of the coin, the risk from the worker's perspective. And I say worker rather than individual here because, yeah, usually it's someone who's been told they're self-employed, but actually they're a worker or even an employee. Is that the risk for them is that they're actually missing out on all these rights. So holiday pay, pension, sick pay, and if they're an employee, all the other rights afforded to employees as well. But even if an individual is alert to the fact that their employment status has been miscategorized, they'll not necessarily be able to get back all of what they're owed. And Charlotte talked about time limits to bring claims, most of them being 3 months. There is discretion. The tribunal does have discretion to extend this time limit in some circumstances, but often it's really difficult to convince a tribunal to do this. This is not necessarily a get out of jail free card for an employer because the tribunal does have a discretion, but it's an important factor to consider. So yeah, from an individual's perspective, yeah, like an employer, it's also really important to consider employment status from the outset of the relationship, just to make sure what is written on the paper actually reflects what's going to be happening in practice.
Yeah. Anything to add to that, Alex?
Yes, from a tax point of view, I think the risk comes from the worker being subject to the general IR35 regime. So if you remember at the start, we talked about 2 regimes, off-payroll and general. The general applies to small companies, and under that one, it's the worker's intermediary that bears the liability. So if you're engaging with a small client, then if there's additional tax to be paid, it's the worker's intermediary that has to pay it. So that's something to keep in mind. Yeah.
Okay, good. So let's then turn now to the practical implementation aspects here and look at what people are doing about this. So first question then to you, Dan. What were the observations from the dry run in March, and how do you see hirers, agencies and contractors reacting this time around?
Yeah, hi, good afternoon, everybody. Excuse me, I think we definitely got an opportunity to see what the behaviours were going to be from hirers, contractors and agencies in March, just until that very late in the day postponement. And I think my main headline observation would be that the vast majority of hirers just simply don't want to take the risks. Obviously, Alex and Charlotte have painted a pretty scary story there from a tax and employment risk perspective, and that's absolutely the case here. So the cost of getting this wrong, not just from a cost perspective, but also from a reputational risk perspective for a hirer, has led quite a number of them to actually make decisions to not look to engage contractors via limited companies. So I would say, roughly speaking, about 20% of our client base made a decision to say, actually, this is complicated. There's lots of areas like reasonable care which are pretty ill-defined and we're struggling with it. So we're actually going to take a least risky approach and just not engage contractors via limited companies anymore. And that allows them to sort of subtly sidestep this whole piece of legislation, and that forces the contractors to then look to engage via umbrella companies or maybe even directly with the hirer on PAYE. So I think that would be my main observation with regards to hirers. We've also seen a number of hirers also consider the risks in the supply chain if there's then going to be the introduction of other parties, perhaps to process payroll and manage workers. And actually, Alex mentioned the way that the liability can transfer back up the supply chain if there's a failure to pass down an SDS. But equally, if the fee payer doesn't deduct the right levels of taxes and HMRC come along, and that might happen because, I don't know, they go bankrupt or they cease to trade, And there's also provision in the legislation for a debt transfer risk back up the supply chain there as well. So a lot of hirers are paying a lot of attention now to who's in that supply chain. You know, if they've got recruitment partners, who's involved there and underneath them in terms of processing payroll, to make sure that they are reputable businesses and financially stable, to ensure that they're protected from risk. I think you've then got hirers who don't want to be as risk averse as potentially the banks were in not engaging PSEs, and actually would say, okay, no, we're going to embrace this, we'll do assessments, and they've got a decision to make then around what assessment they would use. I think we noted some Q&As coming in whilst the guys were talking around, has HMRC got a tool? The answer to that is yes. There's the check employment status for tax tool, or assessed as it's known, which is there. But as Alex pointed out, it's not perfect. It has its critics. There are other commercially available tools as well. We often see those being used where there's quite large contractor populations, where a business is wanting to do assessments at scale, so they're online and that can facilitate it. So what businesses we're looking at doing is making a decision on assessments. If it's a small population, probably use CEST. If it's a bit larger, perhaps one of the other tools available. But also another key part to all this as well is also actually considering how business critical those contractors are to the organisation, because it could sometimes be that if that contractor is super critical to them and they're working on a project and the hirer can't afford them to move on, then perhaps the simplest thing to do is just increase the pay rate there to keep the contractor happy. It's the most expensive option, but it's the least risky option, and we certainly saw a number of hirers going down that road, but probably no more than 10% of their overall contractor population. I think talking about the contractors, they're anxious, no surprises. They're going to see a significant drop in take home, although you could argue this is tax that they should have always been paying. And they'll be keen to make sure they're informed on the decision as quickly as possible. So we're starting to see decisions being made now. Probably most hirers will be really getting through that in January, but there are some that are getting on with that process now. And then the contractors will be moving on to sort of shop around for the best offering they can get from a payroll perspective to improve their net pay. Pensions are a big focus for them. So we saw a big rise in demand for contractors wanting to be paid by our payroll solutions, but have the opportunity of paying into their own pension scheme. So that's an important point. That gives them a legitimate way of protecting them from tax. And some of them will want to look and seek for higher pay rates. Whether or not COVID changes that landscape a little bit, I don't know. It was interesting in March, just before the postponement, when the postponement happened, I think you could hear the contractors delighted that it had been put off for 12 months and hirers to some extent as well. But then quite quickly, because of COVID, the landscape changed in terms of the availability of work, and actually contractors just wanted to remain on assignment. So whether or not there'll be as much of a push from them for higher pay rates or not now, that I'm not sure, but that'll be interesting to keep an eye on. And then finally, the sort of recruitment businesses, I think again, they're super keen to make sure clients are making decisions so they can get on communicating that to the contractors. They've got work to do in terms of issuing new contracts and potentially rate negotiations. So I'd encourage all the hirers, if you're going to go down an assessment road, to be doing that super quick. And then there are also, the recruiters will spend time making sure they are partnering with the right payroll partners to help process payroll for those workers who are deemed inside. And they are acutely aware of those risks that I mentioned earlier, and that debt transfer risk if you pick a financially insecure or non-compliant provider. So really important, both from a hirer perspective and an agency perspective, that everyone's paying attention to supply chain compliance.
Yeah. Okay, so that covers the various parties involved. So let's now consider how these changes can be managed, because we're told HMRC believe that some 80% of current contractors will end up having to pay PAYE. So many workers will experience a change of status and have to end up on a payroll. So what are the available payroll options for contractors who are deemed inside IR35?
Well, there's a few options available. It very much depends upon what the hirers or the recruiters, if they're involved, have decided are the options available. So I think the obvious one is payroll directly with a hirer or directly with a recruiter. If you're being deemed now to be employed for tax purposes, then as Lee was pointing out, you probably want to be getting some employment rights around that as well. So you may see some hirers that'll offer that. I have to say that's pretty rare. Most hirers that we come across aren't looking at taking contractors onto their own books. They're very keen to try and keep a degree of separation, because that's contractor population's often quite transient, a lot of offboarding and onboarding. So where we sometimes help is with a sort of a dedicated contractor payroll, which is separate to the main payroll for the hirer. So there is a bit of delineation there. I think the other one to bear in mind as well is, don't forget about the PSC, the personal service company. So clearly, if someone's deemed outside, then the payments to the limited company can happen as normal. But also, if someone's deemed inside, you can have the ability to payroll people still to their limited company, but make a deemed calculation for tax. So that's where you continue to engage with the PSC. But you as the fee payer, or if you've got someone coming into the supply chain to outsource it, that business becomes the fee payer. And they'll calculate what are the new taxes that are due, deal with all the RTI payments off to HMRC, then tax the remainder on full PAYE and employees, and I pay that off on behalf of the contractor to HMRC, with the net still getting paid to the person's business bank account. It's important to remember that IR35 is looked at on an assignment by assignment basis. So if you've got a contractor who has multiple assignments, they may well still want that income to be billed through to their limited company because they have other work that's outside. So PSCs may still play a part. But I think the majority of the market, the sort of go-to solution would probably be umbrella companies. So the umbrella company is the employer of the worker, so there's usually a full employment contract in place with the contractor, and they have a contract for services. The umbrella company has a contract for services with the agency or the hirer. The money's sent down, and then the umbrella company pays the employer's costs over to HMRC, takes a margin, and the remaining gross taxable pay is taxed and paid to the person's personal bank account. And that employment contract brings into play those employment rights that Lee touched upon. And also, if a contract is moving from assignment to assignment, then the umbrella company can provide continuous employment. So we would say, probably 70% of those that are caught by IR35 are probably going to start moving through to umbrella companies. But important to make sure that you do your due diligence on the market. There is another option out there as well, finally, which is something called PEO, or Professional Employment Organization. That's a US term. You don't have umbrellas in the US. You have these things called PEOs. Very, very similar to umbrella. The PEO engages the worker or the employee, depending on the contract. But because of the nature of the billing and the invoices on the PEO, the processing is a lot simpler, and the wage slips a lot simpler. And as the guys at Freaks will know, there's a lot of work going on from government around the Good Work Plan and the Matthew Taylor report around giving transparency to contractors on the rates that they're on. And our view at Giant is you'll probably see over the coming years that PEO model build up a head of steam in the market, as it just makes the rates for the workers a lot more transparent and reduces a lot of the noise that sometimes the umbrella model can create. Yeah.
Interestingly, HMRC have published today a website offering around the dangers attached to some of these schemes, which unfortunately went through umbrella businesses. So there are dangers out there, as you quite rightly point out. So what advice do you have for hirers looking to engage with payroll providers for help?
Well, I think it's about doing your due diligence. This should be no different than any procurement process to bring in any supplier into your, if you bring, engaging with any supplier in your business. Our industry is no different than any others. There are what I would call the good, the bad, and the ugly out there. So there are plenty of good compliant providers that do make sure that the right deductions are taken. There is a well-recognised trade association that I'm a board member of, the Freelancer Contractor Services Association, that has a code of conduct where you have to go through a series of checks and are audited by firms like EY to make sure that the umbrella is operating to a certain standard. So I think that would be a great place to start. But I think also do your own due diligence. You know, how long has the business been trading for? What's their reputation in the market for compliance? Ask them what, you know, what's processes they have in place to ensure compliance and make sure that, you know, the right amounts are being paid off to HMRC. I think, unfortunately, one of the downsides to IR35, and we saw it particularly in the public sector back in 2017, it's actually created a bit of a breeding ground for these non-compliant solutions to emerge, because contractors are really anxious to get high net take-home pay. And that's going to be absolutely the case this time round as well. Frankly, if you have one of those sorts of providers in your supply chain, you've probably got much bigger issues than just IR35, because, you know, we're talking about offshore tax avoidance, loan schemes. The press around that would be quite negative. So do your due diligence, start with the FCSA potentially, speak to your recruitment partners and ensure that they're also using good providers. And actually, if you feel comfortable, you've done your due diligence on one or two, then mandate that through your supply chain and reduce your risk that way.
Okay, yeah. So one of the options you mentioned is to migrate contractors to employment status. Charlotte, do you have any advice for employers in relation to the practicalities of doing that?
Yeah, it's interesting because it's a conversation I'm having regularly. I've mentioned before the session, I was actually speaking with a client this morning about what to do about their contractors and consultants. And I think that for some employers, obviously, who are engaging high volume, high number of contractors, and obviously quite a lot of what Dan was saying will obviously have a lot of resonance and be quite, you know, the way to go. But if it's the odd person here or there, and what I'm finding is that a lot of businesses, you know, they've had Margaret, who's been a consultant for them for 15 years and has been invoicing them through a personal service company. They turn up and they do 3 days a week. They're doing day-to-day duties. It's not a particular project. Then it's for an employer really needs to think about the type of employer they want to be. And Dan also mentioned about the good work plan and the Taylor review. Amazing. When I was looking at for this session 3 years ago, I couldn't believe that was 3 years, over 3 years now. Where has the time gone? Obviously, we've been quite busy with Brexit and then COVID. So a lot of the recommendations in there we haven't seen, you know, be put into legislation. But there's no doubt it's on its way, and there is going to be increasing pressure on employers to look at the way in which they're engaging with individuals. And so I think there needs to be a decision taken by companies as to how they want to be seen from a reputational perspective. But you can't get away from the fact that, and again, Dan alluded to this, that some contractors don't want to be employees. So that's quite a big challenge. So the first question that I will ask and discuss with a client is, how business critical is this individual? How bad is it going to be for the business if you lose them? Got to ask that question first. You know, particularly with IT contractors at the moment, so many of us have gone from, you know, 0 home working to 100% home working. IT has suddenly become rather critical, even more critical than it was before. So we need to ask that question first, and then that will help you decide how to have the conversation with an individual about potentially moving to employed status. So there are lots of drivers for individual contractors, and particularly people who've been with you for a while, you'll know that individual. So obviously money's one, and the employment, they'll want to understand financially the impact of becoming an employee. So being armed with that information so you can share that with them is obviously going to be number one. But there are other drivers, there are other factors. So job security, again, Dan mentioned the impact of COVID. That is absolutely in the spotlight now. People want that job security, and obviously becoming an employee, becoming more integrated within a business will give them that job security. There are also lots of other benefits that employees get, not just claims and rights, but, you know, everything from gym membership through to well-being plans. And, you know, companies have a lot of incentives in place for employees. So it might be some of those things that you want to be talking to the contractor about. You also need to think about what kind of employment contract you're going to bring them on to. So 0 hours contracts, not very popular these days if we're thinking about reputation, perhaps not the way to go. But for some businesses, 0 hours contracts still have a place. Obviously, as long as they're compliant and that they're not exclusive, but they may be one option. Probably more appropriate could be a fixed term contract if it is for limited project work, or there is a limited amount of time you want an individual to work for you. Again, with fixed term contracts, we just have to be a bit careful because fixed term workers do have additional protection in place. And what I've seen speaking to clients is that you've got to think about things like bonuses and other benefits, which a fixed term worker has the right to the same equivalent package as a full-time worker. So just have to be a bit careful around that. And then obviously there's a full-time contract, which may well be more attractive. Just the other point to note is that you do have to be a little bit careful going into these conversations that you're not flagging rights that these individuals, and Lee mentioned this, an individual who's been working with you for some time as a contractor may not have ever thought of the fact that they might have backdated holiday pay claims or sick pay claims, and having a conversation with them saying, oh, by the way, you're more an employee than you are a contractor, is going to create risk for the business. So you need to think about carefully how you're going to have that conversation. And obviously IR35 creates the perfect excuse to be having those conversations. So, this new tax legislation is coming in April. We've had to have a look at our workforce as a whole. As a company, we want to be treating people in the right way. We want to have a baseline of rights for all the people that we engage with. And as such, we want to talk to you about potentially migrating across to employed status. And that will then lead you into the further discussions.
Charlotte, if I may, I was just going to quickly add into that. There's real tension in the market this year off the back of COVID around businesses. You've got IR35 looming next year, but you've got businesses wanting to have, if they can, as real flexible models, as well. So on the one hand, you've got this whole tension between employment rights, status and tax going on, but also at a higher level, you've got businesses who are wanting to be as agile as possible. So I get asked regularly, well, is this the death knell for contracting? I was asked the same around AWR and pension and etc. And the trend's absolutely not. The trend will continue to go, and there'll be more and more contingent work out there. We'll probably all find ourselves working more and more in that way over time. So it's just quite a really interesting period of time at the moment with this tension going on, with businesses considering more employment rights, but equally also wanting to try and keep people at arm's length and be a little bit more agile. So I think we've got an interesting 18 to 10 months ahead of us.
Yeah. Okay. Right, well, thank you all for your responses so far. I think that's been pretty thorough. We've received a number of great questions from the audience, which I'll come to in a minute. But just before I do, could we pop the poll question back up again, please? And let's just see how we've done so far. We'll come back to this afterwards, but just give you a few seconds to complete that for us. As I say, we'll come back to it when we've looked at the questions. So we've a few questions around carrying out assessments and the appropriate tool to use. And I think we mentioned CEST, the HMRC tool, briefly in passing. So first of all then, have there been any changes to the HMRC CEST tool since March? And what is your view on its reliability and its suitability? Let's start with Dan.
Yeah, well, it certainly had been updated. I think it still continues to be criticised, but I think we've got a much better version of CEST now than we had in 2017 when it was first launched. The glaring omission is still mutuality of obligation, as Alex touched upon, and that's sort of where it becomes criticised. But I think if HMRC is saying that, use CEST if it gives you an outside determination, you've took reasonable care and answered all the questions factually, then why wouldn't you start with it if they've said they're going to stand behind it? But the key point there is that any tool, no matter what you pick, is only as good as the answers that you put in. You've got to be truthful in your responses. NHS Digital is an example of someone in 2017 that have gone down a CEST approach, but thought everyone was outside, and there's actually been a much publicised backdated tax bill going their way because HMRC have said, sorry, you didn't answer the questions truthfully. So I think CEST has its place for sure, especially if you've got smaller contractor populations. Use it. We have a number of our clients that will use it in the first instance, but then maybe also back it off with an additional test from another one of the other providers, just to give them a more rounded view. You're also seeing in the market now some insurance products coming up, which will basically say, you know, use this assessment tool. If it gives you an outside decision, then you can purchase an insurance product that will protect you from these tax liabilities. We won't know until a few years' time how robust those insurance offerings are, but I know that, you know, the large insurance providers that are putting the names to them. So it may be that hirers want to look at that as an angle for them to give them some comfort. But I would always advise, you know, don't rely on insurance. You know, we have car insurance because we drive a vehicle and drive it, you know, safely, not to go recklessly charging all over the place. So make sure you do your assessments if you're going to do them properly. Use CEST or use one of the other tools. And if you are going to go down the insurance road, consider it, but don't rely upon that exclusively.
Yeah. And Charlotte, what's been your experience on assessments?
Yeah, I think really just reiterating what Dan says, it's really important to make sure that you're not wholly reliant on a tool like CEST because of some of its potential flaws. And also, it's only as good as the information that you put in. So what I've seen is that a lot of clients have used it as a starting point. So they've used it to give them a general idea, a general steer, and then they've also gone further than that to reassure themselves that they are getting the correct answer. But I don't think it's a case of for many saying the CEST tool says X, so that's okay. They're not feeling that confident in it.
Yeah.
I think, as you said as well, Charlotte, earlier, if you've taken that business critical assessment first and you start bucketing up your contractors in, I call it bucket 1, can't afford to lose, bucket 2, maybe, bucket 3, you know, why is Bob still here? You may actually find that you take a different approach on assessments based on that piece as well. And that would be helpful for the clients to sort of narrow down how much work they've got to do in assessments if you consider that business critical aspect first, because you may well not need to be assessing a number of people because you may decide you know, moving them on anyway, for example.
And there will be an appeals process. How do we think that's going to work, Dan?
I'm a bit of a cynic, I have to say, when it comes to the appeals process. I think it's a bit of window dressing, really, to make the contractors feel engaged in the process. So the appeals process starts from the minute the SDS is issued, and you've got 45 days. So the hirer has to issue that to the worker and has to issue it to the fee payer, whoever that is in the supply chain. I am yet to see an example where a hirer has changed their mind on that decision, despite an appeal if it has taken place from a contractor. But I think one of the things where in public sector where there was a lot of criticism was around communication and contractors not being aware of what the status was. So I can understand why an appeals process has been brought in, but I think it's I don't think you'll see it influencing hirers' decisions.
Okay, and maybe time for one last one then, which gives you a chance to do a summary as well as we do it. And it's relating to risk and liability again. Do I need to know how all contractors are being paid, even if we don't pay them directly, but we've passed on a status determination statement, we've done our bit. If they're not paid correctly, who is actually, if they're not paying tax correctly, who is liable?
Well, I'll go first on that. So, well, first of all, you're doing really well if you know how many contractors you've got, because I'd say the majority of people I speak to, that's a challenge in itself, because contractors tend to be coming in from lots of different places. So if you've done that piece of work and you know who's around, and you've issued your status determination statement, and there is a fee payer involved other than yourself, i.e. the hirer isn't paying these workers directly, you're paying a recruitment agency or a third party like Giant. If you've done your assessment and passed that down, then if the worker is being paid gross still and the fee payer is not deducting the right levels of tax, then that risk absolutely sits with the fee payer. It wouldn't be your risk as the hirer because you've discharged your responsibilities. We see often a lot of contracts being issued asking for indemnities around this point. And of course, if a fee payer is in the supply chain there and given an inside determination, then they should have no qualms about providing some sort of indemnities and warranties around that, because they should be deducting the right levels of tax. But remember, that's precisely the reason why they've introduced, HMRC have said they can have debt transfer and move back up the supply chain if someone fails to do what they need to do, so that HMRC have always got recourse on collecting that tax. So as long as you've got the right sort of providers in as the fee payer and you've discharged your determination, then there should be no reason for you to want to explore it further. I don't know, Charlotte, you've got anything to add on to that?
No, I think that's right. The only thing, I was just looking at the time, if I may, there was just one other question I saw pop up, which I think would be good as kind of an end summary, which is around what if you want to kind of help a consultant, often the case, who you engage to stay as a consultant. So how can you, is there steps that you can take almost to not then have to bring them on board as an employee, or to look to an umbrella company, or to look to one of these solutions? And I think one of the other options that perhaps we haven't discussed is to do these assessments, look at who you're engaging, but then look at how you can get some ticks in the right side of the box, if you like, to show that they don't fall into either employment status or employment status for the purposes of tax. So it comes back full circle to the tests that Alex set out right at the beginning of our session, those 4 pillars, although it is a slightly different test for employment status to employment tax status. They're so similar. And actually the Taylor review talked about bringing the tests together and having the tribunals binding on each other. So it is a very, very similar test. So if you go back and work through that and try and make sure that you allow a substitute and actually actively encourage a substitute, there isn't that mutuality of obligation. You're not exercising control. They are required to bring some of their own equipment, laptop, things like that. Then you're kind of trying to reverse that test. Then that is obviously an option. If that is practical and you can achieve that, then that would provide you with a degree of protection.
I was quickly going to add, I think some of the other commercial tools out there will give you like a red, amber, green view as to where they potentially are weak, and that gives a client the ability to review those working practices. But I suppose at least we don't have to worry about too many contractors attending the Christmas parties this year anyway, so that's one thing we can tick off the list.
Yeah. Big test. Yeah. Good. Okay. Well, thank you all. And I know everybody's dying to know how we did on the poll, just to test you guys. So here we go. We started off with 61% who were reasonably prepared for April 21. That's now gone up to 84%. So well done. I think that's a good job. And even more impressive, there was nobody who was very confident, and we now have 7% who are. So 7% in the complacent category. So well done. But the not at alls, no confidence at all at the beginning, was 39. There are still 9% who need homework. So we will be including the contact details for all you guys. So those 9% and the rest have somewhere to go should they need it. So many thanks to all our speakers. And to you all for your attention. You've all stayed with us, which is great. We trust it's been really worthwhile. And we will be following up with the recording and a quick questionnaire to let us know what you thought. If there's any specific questions, as I said, you can address those offline. Let us have them via the contact details that we'll include in that note. So thank you again, and have a great day. Thank you.